The stock market, this is what most people don't understand. And what I find really frustrating is people go and they own all kinds of stocks. They own all kinds of sector ETFs. They're like, I am fully diversified. I am good. I've got a good portfolio. But when we're in a bear market, the tide's going down, all of their positions pretty much crash. What people don't realize is the stock market is one asset class. So you don't need to own a whole bunch because they're all the same trade. They're all going to go up. Some will go up and down faster than others. That's the only real difference. The key is when the stock market is trending up, you want to own it.
Your relationship with money matters. I'm Michelle Perkins, and this is the Money and You podcast, where I will be breaking down your relationship with money, offering tough love money tips, and a money dating plan that will focus on lifting the barriers to success to help pave the way for better money practices and increased wealth. It's time to take control to live a limit-free life. It starts today. Hello, and welcome to the Money and You Show. I'm your host, Michelle Perkins. So happy to be here with you today. And I have a great guest. I feel like we're starting this year really strong with today's guest. And he is going to talk about a variety of things. He's an investment expert. And so let's get started with him. I'm going to tell you a little about Chris Vermuelen. So Chris is a financial expert who challenges conventional investing wisdom and believes that investors should only own rising assets. With over 25 years of experience, Chris shares an alternative investment style called asset revesting. That allows investors to achieve higher returns, lower drawdowns, and profit from bear markets. Chris founded the technicaltraders.com, a platform that provides investors with asset revesting signals and education on using technical analysis and position and risk management. He's also author of the books Technical Trading Mastery and Asset Revesting, his newest book, which explores innovative investment methods. Chris's investment philosophy is grounded in the belief that diversification and the buy and hold strategy can be dangerous for mature investors. Instead, he advocates for only owning assets that are rising in value, selling those that are in decline, and using technical analysis to identify and confirm these trends and price action. This approach helps investors achieve above average returns while minimizing risk. He's passionate about sharing his investment knowledge with others and is dedicated to helping investors achieve financial independence. And that's what we love here on the Money and You Show. And so, Chris, welcome.
Hey, thanks for having me, Michelle.
Yeah, thank you so much for being here all the way from Toronto, correct?
Yep.
That's great. So I'm super excited about this show. I was listening to some other podcasts, and the first one I listened to, you were a guest. I thought you were a guest on because it was your name, but it turned out to be a racing podcast that was a really unusual one. So that's not you, right? You're not racing in your spare time?
No, there's another Chris Vermuelen. He's a super bike racer, a motocross racer, in the UK.
Yeah. So anyway, I heard a lot about him before I realized that. I was waiting for them to say, and he's a trader and investment professional, but no. So, okay. Well, I'm so happy you're here. There are a lot of questions that I have that other people have that you could answer because you are super knowledgeable about all things investing, it sounds like to me. Can you give us a little of your background, just how you got to this place?
Sure. Really high level. So I grew up in an entrepreneur family. I lived in a small town. My parents both had their own businesses, and my sister and I grew up helping them run their businesses, stuffing flyers in mailboxes and going to events and things like that. And I just kind of learned at a very early level that you got to work really hard, and if you're, to do stuff that you enjoy and that you're naturally good at. And I just kind of evolved from there. I ended up being a little entrepreneur myself. I ended up having my own landscaping business through high school, went to college, started trading. I really got hooked in the stock market in high school. My last year of high school in finance, we ended up having a stock market challenge. And this is how I kind of got my feet wet in it. We were given $100,000 of play money for one semester. We had to try to beat out other schools. And we ended up making like $180,000 in a semester of play money. And that was it. I was like, well, this is what I want to do. Like, that's the easiest money I've never made. And you don't have to do anything. And so that got me kind of hooked. And it wasn't long after that my dad had got this little package in the mail from a guy named Larry Williams, who's one of the top futures traders, and he still is. And it was about how you can make fortunes trading futures, which is a very high leveraged asset, very dangerous if you don't know what you're doing. Even if you know what you're doing, they are pretty dangerous. But I read that booklet and I told my dad, I'm like, I want to get into trading. Let's open an account. Let's trade futures. And he kind of laughed at me. He's like, no. He's like, I'm doing my thing. You can learn about it, but futures is dangerous. And I think I was 16 at the time, so pretty young. Anyways, fast forward, I ended up going to college in Toronto, and I grew up in the country with no TV. And so when I got to college, I had TV and cable, which I watched Speed Vision. I got addicted on watching cars, and I got addicted on CNBC. And that was when I was like, seeing all these people make all kinds of money. This was 97, 98. The tech bubble was just in the feeding frenzy phase. And I ended up turning 18 eventually, opened a trading account. My first trade was in Palm Pilot. Do you remember those phones?
Yeah,
Palm Pilot was the first pencil. And I put in $2,000 into that investment, went away for holidays with my family for Christmas, came back and had $8,000.
Wow.
So like quadrupled my account. And then I was in hook, line, and sinker. I'm like, this is all I want to do. And I've been doing it ever since. It's going on like 26 years. I live and breathe it. I share what I do. I invest in my own money. And I've done all kinds of different styles of trading and investing to get to where I am today. So I've done options, I've done futures, currencies, swing trading, day trading, scalping, you name all these different styles. And I've gone full circle to find what is comfortable, what my personality type fits, how much I want to work or how aggressive I want to be. And all of those things. And I think that's really important. It's not just in trading, but whatever you want to do in life, you need to make sure you pick something that fits your personality type, that you wake up energized and excited about, and it's got unlimited potential. So that's kind of where I've been. And I just refine my strategies and I share what I'm doing with my money with other investors to follow suit and copy more or less what I do if they want to. That's it in a nutshell.
Well, that's fantastic. I love the excitement around what you do. I've always thought that was the most important thing. It's just important to, especially when you're a hard worker, to get up in the morning feeling kind of, good about what you're doing and find some gratification, whatever that means to you, in what you do. So that's always exciting to me to hear somebody who's found that and is doing it. I love that you brought up the personalities, because I do believe that money is a relationship, and how your personality fits with money and how, you and money can relate to one another is very dependent on your personality, along with your beliefs and how you grew up and just the things that you carry around with you underneath in your subconscious. So, I want to go there a little bit, because money is very emotional. That's a lot of what I talk to people about. People may or may not even get into investing or try it because of belief systems they have or emotions they have around it. And there are a lot of emotions. I mean, I've had guests on the show talking about their own emotions when, things that they've tried either went well or didn't go well, and how to manage those things. But, yeah, talk to me a little about how emotions fit into the work that you do, and if you're helping people to get into this, what you see going on with that. That's a terrible question.
Yeah, this is pretty much the biggest obstacle. It's the most important thing that people need to manage and understand. And there's a lot of areas where the whole emotions comes into play. So first of all, trading, as you said, money is emotional. So the stock market is the ultimate emotional beast. It will get into your head. It will make you feel like you need to get out or feel like you're missing out on a move. It's just absolutely great at pulling people's money out of their pockets and putting it into other people's. And that's the biggest thing. So we did a survey with about 5,500 traders and investors late last year. And the number one thing was people struggle to manage their emotions. And it really comes down, a big chunk of it comes down to they're probably trading a style that doesn't fit their personality. A lot of them don't even know what their personality is. So to go right back to ground zero, I wrote an article about your personality type. You've heard of the Myers-Briggs,
Sure.
Obviously. So the Myers-Briggs, so if there's 16 personality or 18 personalities, I can't remember what it is now. I think there's 16 personalities, and more or less 13 of them do not bode well for somebody to manage their financial. And the reality is 80% of those people of personality types are in that those 13 categories. And so a lot of people managing and trading their own money or investing in different things are really stuck into this emotional space, and they're scared to pull the trigger. They don't do what they need to do. And the biggest thing is, I think, for somebody to go out and do the Myers-Briggs personality test and then read about how your brain perceives and senses and does all these things. And once you get a good feeling, if it really connects, if you're like, wow, that personality type is me, then you can really go into the weeds, into the details of kind of how your brain ticks. Because if I'm considered an INTJ, I'm called like the scientist. I'm very logical. Everything has to make sense. I need to understand it. And then I have, total confidence that I'm doing something and I can go ahead and do it. Whereas I cut the emotional out. I kind of am like Data off of Star Trek. I'm kind of like that robot, very, very non-emotional. I am very emotional, but I can control myself when it comes to stocks and investing. I can think things through, map out a plan and be like, okay, this is what I need to do, even though it makes me nervous or scared just because the market or something is having extreme moves. We have to still make the right moves. So anyways, the personality side, this is something I help a lot of people with. We identify kind of who you are, how you tick, and then we will eventually move over into, every day or every week, I provide updates and I walk people through what the markets are doing. I have built custom indicators that read the data out of the stock markets that tell us what other people are thinking and feeling and where they're putting their money. Are they scared of losing? Do they have FOMO? They're scared of missing out on more gains. And when I put all this together, I'm pretty much holding investors' hands as the markets are moving. And 2022 was a perfect example of people writing in going, I cannot believe the markets are down like 25% and I'm super comfortable and, our accounts are growing and I've never felt this clarity and freedom. And that's what I try to do is I try to walk people through the markets, say, this is how the markets move. There's these cycles at play. There's a lot of things that go into it, but the markets are not totally random. And the nice thing about what technical analysis does is it allows us to follow price. We don't care which way it's going. We don't have to pick a direction. We don't have to pick a top or a bottom. We just have to let the market give us a big trend. We identify it and we move on to that trend and we trade it, which we can get into a little more details later if we want to, but that's it in a nutshell. But you have to control your emotions. And most people really struggle with that, unfortunately.
Yeah, thank you. That was a great explanation. And I agree. And it does go back to money being a relationship. I mean, in any relationship, you have to control your emotions. I mean, people do and say things that bother us or scare us or whatever. And, you can't react all the time on everything going on. And I think with money, it is the same. It's hard. It's hard for people to see. I mean, to realize that they're out of the data and into the emotional space, I think. Sometimes you think, oh, well, this is happening. That's a fact. So I'm going to react to this way with money. And yet it really is more your own ideas about what it all means. I'll give you, my husband sold off our whole stock portfolio, which was kind of okay back in the day right after 9/11. And he didn't even tell me. He just freaked out so badly that he just did that. And he was like, we'll put it all back. Well, of course, you don't put it back. I don't know what magical day he was expecting would be the right day to put it back, but it never happened. And clearly I've never quite gotten over it. So, but yeah, that was my best emotional reaction story that I have. So,
yeah, well, it's very serious. So there's 4 stages that the stock market goes through. And long story short is the 2000 tech bubble is a stage 4. It's a big decline. It's a financial reset. The 2008 stock market crash, that was another stage 4. That was a financial reset. It resets all kinds of different assets from real estate to stocks, to bonds, to currencies, business valuations, all of those things. And, I think we're coming into in 2024, 2025, another stage 4 decline. And I've created an infographic that shows the emotions of investors, the average investor who doesn't, for lack of words, doesn't know what's happening,
right?
The emotions of what the masses are doing. And they hit this panic stage And then they go into denial. They can't believe how much they've lost. They don't know what to do. Eventually they hit that panic level and they just eject out of their trades. And it's usually when most of the downside is done. And then they go into this depression stage. And this is what I'm trying to prepare a lot of people for, because people who are like in the buy and hold portfolio, I don't think a lot of people actually understand how much risk is involved with the buy and hold. You're really throwing your money into assets and leaving it there, literally just letting it do its thing. If the average investor went to their advisor and they said, okay, how much could I lose with my current conservative investing strategy that I have with you? If they actually ask that, because they're all going to have roughly a 60-40 portfolio, 60% stocks, 40% bonds, or maybe it's 50-50, their advisor is going to not want to tell them, because they'll be like, well, you could lose 40 to 45% of your money like in a 6-month window during a bear market. And if everybody realized and knew that that's what their life savings were bet on, and they're paying somebody huge money to just leave it there, they would probably blow a gasket and be like, no, get me out of that. I am not comfortable with my life savings just because you're leaving it there. And that's kind of where I come in. And the problem is, if people go into a stage 4 decline, a big reset, like there was like something like 8,600 suicides in 2008 to 2009, directly linked to falling stock prices. Wow. That's how serious this is. And it's actually pretty darn easy to avoid a bear market by following price. There's very clear technicals that say the trend is down, price on average is falling over multiple timeframes. We don't want to hold something if it's going down. And if something's going down, there's other asset classes not connected to it that are going in the exact opposite direction. So we just shift from something that's gone sideways or down, we move that money to something that is going up. And usually when we move to something else, it's a slower moving asset. Could be bonds, could be a currency, and it's going to go up in value. So this whole emotional side, I mean, emotions really are the devil, and it is deadly, as we can see from multiple financial resets. There's waves of suicides, and it's not fun. It is not. And that's the whole point of, if you follow technicals, we can see these coming miles away. We're prepared and we can actually take advantage of it. But that's the problem, is the market gets its teeth, its claws into you, and it pulls your account down, and you literally don't know what to do. Yeah. And that's the bad thing, is you feel helpless and you've lost 30, 40 years of life savings. And it's a terrible spiral. And that's where my strategy that you mentioned earlier, asset revesting, is completely different from every other style of investing that people have heard about and do. And it's a huge disconnect, and it's a huge relief for investors who are bringing it on and using it with their account, because it completely removes a lot of the risk and guesswork. And you waste a lot of time with the buy and hold. You never see somebody with a buy and hold retire 20 or 30 years younger. They have to put in that time and ride out those roller coasters and get a really poor average return than just always riding assets up or sitting in cash until there is something that's ready to go back up again.
Right. Yeah, that is very interesting. And it's really interesting to put it in that perspective, because if you are doing this over a long enough period of time, that's, I guess, where the returns look good. But if you're, like you said, if you're already a little bit older, you don't have the time to come back from, whatever happens. Super interesting. As you were talking, I was thinking, well, I think it's something that sounds doable for you, for somebody who's able to manage their own accounts. If you have somebody managing your accounts for you, are you able to get them to go along with this? I mean, can you describe this to them and have them accommodate this?
Yeah, so for sure. And so I provide a newsletter where people can follow my trades. And I also provide lots of education. So more or less, I provide actually trading signals. I say, buy this ETF with 100% of your portfolio. As soon as we get into it, I update saying, okay, put our protective stop in. So if for some reason the markets crash or start to fall, we've got an order standing out there to get you out. So if you have placed trades before, you can just copy what I do. To take it one step further, I provide auto trading. So if you just want the strategy done for you, you don't want to learn it, you don't want to follow it, you can just have it executed in your brokerage account, just like you have an advisor, except for your money is actually being managed versus just kind of sitting there and paying fees. It's a very different process. So you can be as involved as you want, trading your own money, or literally just set it up and let it run and trade on its own. So it is accessible to anyone. And the reality is, if you want to get into the stock market, I know a lot of people don't want to hear this who are heavy into the stock market and love it. The reality is, I wouldn't really tell anybody to go in and start to become a trader or an investor and plan to make their fortune doing it, because it really takes 15, 20 years to fully grasp it. And then you have to be on it every day and have systems in place and strategies and be very, very diligent with your money and your actions, your emotions, be able to control all that. You have to be super self-disciplined, strategized, systemized. If you're not planning to make stock trading or investing in the stock market your life focus, you're best to just hire somebody, because it takes a lifetime to figure out. I was lucky. I started at the age of 16 following it. Finally, 18, I was able to trade, and that's what I do. It's my passion, my game, my hobby, my sport. It's everything. So it is a very tough beast. And as you mentioned, if you don't want to go and do all that stuff, you can copy my trades, or you can have the asset revesting strategy executed for you in your account.
Yeah, that's great. So your newsletter is you can find it at thetechnicaltraders.com to follow along. Okay. Yeah, I think that's a really great piece of advice. And for people who, there are so many categories of folks probably listening here, people who've never invested, people who are pretty seasoned investors. Is there any difference, if one or the other is reading your newsletter or following along? I mean, one might understand it better, but is there a difference in behavior or what they should do with the information?
No, believe it or not, this sounds bad, but it's kind of a one size fits all. Okay. So more or less, I provide the strategy trades only ETFs, which are exchange traded funds. So it's a big index type of fund. So you're not buying any individual stocks. The nice thing about ETFs is they're very liquid. They're slower moving because they carry big baskets of either the stock index, or it's bonds, or it's a currency. So more or less, you just, everyone kind of follows suit, and you just trade those ETF signals. Some people who will understand it a lot more, others won't. But the way that I do my videos and explain things each day or weekly, depending on the type of newsletter you join, they're very educational, very down to earth and high level. I do go into the details, but I always explain it like, here's the big picture. And then we keep zooming in and go, these are all the little things that are happening within this. So people will find it everyone seems to find it very satisfying that they realize, I see how the market ticks. I'm understanding it. People start to see these things happening as I'm doing my videos. And you'll find it, the more you learn, the more comfortable you become with the market. Most people are very lost. They don't understand how the market moves.
Right.
And, the key here is to break it out to a high level. So I'm a surfer, I'm a kiteboarder. I love the ocean. Now, if you're walking down the beach, down an ocean coast, you probably see surfers out past the break, the waves. And I like to look at the stock market just like the ocean. The ocean's got the tide going up, which raises all boats, and the tide going down, all boats go down. The stock market is the same. If we're in a bull market, the tide is going up. Most stocks are going up. We want to probably own stocks. If the stock market is going down, the tide's going down, pretty much all stocks go down. There's no point in diversifying across a whole bunch of stocks. And to kind of break that down even further, if we're a surfer sitting out there, floating out there on our board, we're waiting patiently for that next set of clean waves to roll through. And the stock market has these wave-like patterns that roll through the markets every year. There's 5 to 12 waves, depending on how the year goes. And we wait. And when we see those waves coming, they stand out above the rest. We can see them coming. We can pick which asset has a big wave running and which one we're comfortable with that meets our comfort style, our risk tolerance. And then we hop on that wave and we ride that stock or that index higher. And then the nice thing about being on something that's very strong is we can also tell when it's starting to weaken. So we know when to start locking in profits, when to start moving our protective stops up in case it wants to roll over sooner than later. And eventually we exit the trade. And then we wait there looking for that next set of waves to roll through. So it's not very active. Like asset revesting is stuck right in a really awkward spot. So you've got the buy and hold investors who do absolutely nothing, and they pay for it because it takes them 40 years to retire versus, 10 or 15 years. And then you got the active traders who all the stats, everything shows the more you trade, the more you lose. And it's a battle. Both of those are extremes. And if you do anything to an extreme on one end or the other, it's dangerous. And you could have good results, but most likely it's going to end up taking a long time, or you're going to have very costly mistakes. Asset revesting is kind of in the middle. We have 5 to 12 portfolio adjustments through the year, just as these waves roll through. And we just rotate our capital from one wave to floating, to waiting, earning interest, and then catch the next wave, ride it, and then move back to cash, wait for the next wave. So it's a very different strategy. And for a passive investor with an advisor, they're going to be like, oh, that's really active. That's 5 to 12 trades a year. I've never had to do a trade with my strategy of doing nothing. And then an active trader is the opposite. They're like, that's not enough trades. I'll never make any money. So, there's always a sweet spot. There's always profits to be made where nobody's at. And this happens to be that sweet spot in the market where we have economic data. We have all kinds of cycles and waves that roll through the markets, and then momentum waves of emotional traders pushing sectors or commodities or currencies around. And we just get to sit back and we can watch them and hop on. And that's what really sets us apart, is we do just enough to navigate these markets and protect your capital, but we don't overtrade where we're trying to catch every blip on the chart. We're just trying to catch beautiful, clean waves in assets and forget the noise, forget the day-to-day Fed chop and all that stuff that comes with news-driven moves and short-term whipsaws in the market.
Yeah, thank you. That was such a great analogy with surfing. And I love that. And it makes it sound easy when you're talking about it, but you're talking about watching these trends. And so we can just, watch them through you. But that's the piece that seems complicated to me. Like, how do I see these trends?
It is. I have a lot of proprietary analysis and indicators and strategies that all come together. So from a high level, a lot of traders, if they get into technical analysis, a lot of them will use a lot of indicators on their charts. The thing is, a lot of indicators, or almost all the indicators, are running off the same data that's on the chart. They're running off the price of that asset that you're looking at. So I take things back, I peel it back like an onion. There's a lot of layers to the stock market. Everything is interwoven. So if one asset moves up, there's another asset somewhere else throughout the whole financial space going down, because money's flowing out of that one and going up, going into something else. So there's always these money flows. And so every type of data that I use for every indicator is using a very different type of data. So one of them is technical analysis based off price. Is the price trending up or down? And how strong is that trend? And what's the long-term and the short-term trend? Then there's other things where we look at, for example, like the New York Stock Exchange volume flow. We want to know if people are piling into the stock market and they don't care what price they pay, FOMO. They're just feeling like they have to get in, they're getting left out.
Yeah.
Or is there panic selling? They don't know what to do. They just like, get me out. I'll take any price. They're just hitting the sell button. And the reason I use the New York Stock Exchange is because it's known as the big board. All the big brand name stocks are on there. If you went up to average Joe and said, hey, pick a stock right now, they're probably going to name one that is on the New York Stock Exchange. And those are the emotional traders. So wherever the volume flow is on the New York Stock Exchange is the mentality of what the masses are doing. And when the masses are all buying, we're generally trimming off profits. When they're all panicking, we're usually seeing a market low. So it is a really good tool. But we also use other tools like time cycles. Time is very powerful. We use sentiment among other investors and where money flow is between different sectors, different commodities. So there's a lot of pieces that come together to create this. And that's what I'm saying. It takes forever to really find all these things. Most people, I don't think, will ever find these unless you're nose to the grindstone and just push forever to try to pick up these little nuances and be like, okay, I see this over and over again. And then once you see it, you can't unsee it. And so I take all these and I weave them together to create a master strategy that literally expands and contracts with the stock markets, with the different assets, manages positions, and allows us to identify momentum, picking up, slowing down, all these things. So to answer your question, how do you do it? It takes a lot of work, a lot of years, and that is the secret sauce. And that's what I really focus on, is because, the buy and hold strategy's got a 40 to potentially 50+% max drawdown, meaning you could lose that much during a bear market phase. Strategy that I deploy is less than 6% during the worst phase. So it's a very big difference in terms of worst case scenario. I'm not going to lose a whole bunch. Best case scenario is we just keep making money and watching our accounts hit new all-time highs because we're only holding things going up. And that is the big disconnect. We don't hold things falling. And to take things one step further, the stock market, this is what most people don't understand. And what I find really frustrating is people go and they own all kinds of stocks. They own all kinds of sector ETFs. They're like, I am fully diversified. I am good. I've got a good portfolio. But when we're in a bear market, the tide's going down, all of their positions pretty much crash. What people don't realize is the stock market is one asset class. So you don't need to own a whole bunch because they're all the same trade. They're all going to go up. Some will go up and down faster than others. That's the only real difference. The key is when the stock market is trending up, you want to own it. And it's one of the most volatile. You want to be in it. It's very liquid. When it's not trending up, get the heck out of the stock market and go move to a currency, something that moves like a snail, super slow, but they trend beautifully. You can squeeze out a few percentage to the upside in a safe, comfortable way. While the stock market is bombing, people are panicking and people are emotional. And so that's the big disconnect. People are like, well, I don't want to sell all my position. And that's what I do. We move in with one position at a time. So we're either own the US stock market indexes with 100% of our portfolio, or we own a different asset that's going up. And we don't spread our money out over a bunch of stuff because diversification is how you get poor average returns. If you're diversified, some are going to be going up, some are going to be going down, and your good winners are now killed by your losers because you're diversified. So it takes away those gains. So all these things come together to me, it's the most logical way. I've been working on this since 2001, this particular strategy that I've been trading. And there's nothing out there I found that can beat it. The key is having the right expectations of the markets. People think they should be making 50 or 100% a year if they're an active trader or an active investor. That's not true. That's very rare. It's about being consistent, just pounding out first, second base hits with your full account, avoiding market corrections or profiting from them even better, and just plugging away, watching the account just consistently grow. And the strategy that I use is called CGS, which stands for Consistent Growth Strategy. And there's something about it, and it's definitely very, very powerful for any age that you are. But for anybody who has a lot of money, who's close to retired or retired, it really is kind of the ultimate play, because you do not want to lose 30 or 50% of your money over the next couple of years, right when you need it the most. Mm-hmm. And we're all at probably the wealthiest we've ever been, because we just went through multi-bubbles through real estate and stocks and all those different things. This is, when things are really good, there's usually only one way to go, and that's down. Yeah. So you got to protect the downside.
Yeah, so interesting. And it really begs the question that, why isn't everybody doing this? So, I don't know why, but do you?
Well, yeah, I know why the financial industry does it more or less. And it's pretty simple. And this isn't to put the financial industry down or the financial advisors. I don't believe, advisors should have their investors in these high risk moves. But the reality is financial advisors have to have their clients in investments, or else the SEC says, well, hey, if you're just sitting in cash, you're not really managing their money. You shouldn't be able to charge an AUM, 1-2% a year for doing nothing with their money. So instead, they just dump your money in and they leave it in positions and just say, oh, just keep putting more in. And over time, markets will come back if they're going down. But that's the problem is if they go outside that norm, then they're subject to being sued, because some investor will be like, well, we did this crazy strategy and you lost me a whole whack of money and I'm going to sue you. So they don't want to do that. Instead, if all the advisors do the same thing, which is more or less, if you're a non-technical advisor, nothing, you just keep buying and holding and throwing in more money. When one person loses their shirt during a bear market, they've all lost their shirt, all their investors. So there can't be a lawsuit, and it just doesn't happen. So they just stick with the safe mold. You know what? Just leave it. We'll collect our annual fee for that. and they can't sue us because we didn't do anything wrong. Everyone else lost money, so how can they sue us? And so they stick in this very safe bubble, right? There is a handful of advisors that are amazing technical traders that apply analysis and try to navigate the markets, but most of them just do the same old shell, because if they step outside of it, first of all, they don't know trading.
Yeah.
A lot of them don't really know a whole lot about the financial markets when it comes to technicals and things like that. So it's definitely outside their wheelhouse. And they don't want to step outside their comfort zone and get in trouble doing that. So.
Yeah. Yeah. Very interesting. Wow. Well, okay. I know that you also do more than this, and you had mentioned other ways that you invest money and build wealth. So I always think it's interesting. There's always this like, should I do real estate or should I do stocks? And the real estate people will tell you all day long that's the only way to go, and the stock people will tell you the same, and it gets really kind of funny at a point. So what do you have to say about, you talked about diversification. What about diversifying in these ways?
Yeah. So while I don't believe in diversification inside the stock market, I believe in diversification of owning multiple different assets. So I believe you should own some stocks. I believe you should own real estate. I believe you should hopefully own a business or a product or whatever else you can do. I'm huge into investing in different assets. So I own a lot of real estate, waterfront properties, multifamily properties, self-storage facility. I've invented products, I've licensed products. So I do a lot of different stuff. A lot of people get into whole life insurance where you can really become your own bank. You put money in, you're insured. And, when you pass away, your kids can have money, but you can also borrow that money, your insurance, and use it to buy other investments like properties and things like that. So I'm a huge advocate of real estate. I love it. My father was huge into it. At one point, he had over about 1,500 units back in the, I think it was the 80s. I was just a little tiny kid. But real estate to me is a no-brainer, and it's a slow-moving asset. You just don't buy into a bubble and pay a premium. You need to wait for these full cycles, which I think real estate is going to be an amazing buy, potentially in 1 to 3 years. Finally, it'll be a fair value. Everything is in this bubble phase right now. But I love real estate because it's passive. If you buy a nice multi-family property, like a duplex, tri, quad, or bigger, you get a real good bang for your buck. If it's cash flow positive, you've got cash for the rest of your life every month. Plus, you've got an asset that over time is going up on average about 8%. It doesn't get any better than that. You just keep accumulating more and more buildings. If you ever down the road need a huge injection of cash for whatever reason, it's probably paid off or close to, and you can cash it out and bring back, potentially millions in cash that you could use for something else if you have a new opportunity you want to move into. So I think you have to diversify into stocks and to real estate and even different real estate, right? Like, I think multifamily is a very, very solid, as good as it gets. And same with self-storage. I think both of those are great, but they're very different plays. Self-storage is considered an industrial property. Even though has a bunch of tenants in it renting spaces, it's still industrial. So it is a nice diversified play and can do really well actually during market downturns. Self-storage facilities, people start downsizing their houses. They all move their stuff into storage facilities. So it's one of those kind of somewhat recession-proof assets that can actually do better while other things are suffering. And so there's a lot of different ways to invest in
Yeah, that's fascinating. Thank you. And how did you had family who, obviously knew a lot about this, but for people who don't, who maybe are the first ones in their family to buy real estate or whatever, how do you learn about things like self-storage? Do you just listen to podcasts? What do you do?
For sure. I always read books. Yeah. So, or I read books or I'd buy a course, right? So I'm not a huge fan. I went to college, but I'm like, if you really want to learn something and make money like really quick and be a pro at something, you go online, you source out the best person who does what you want to do, what you want to learn, and you pay the $1,500 or the $5,000 for their course that you can literally devour over a weekend or over a week. And you've just learned that niche skill set that you want. And so there is that for self-storage. I paid, I think, $3,500 for one of the top self-storage courses. I even went down to Minnesota or Minneapolis. Can't remember which city it was. Anyways, you can get everything you need online. You buy the course, you hammer it down, you get it nailed in, and then you go and you find your first piece of property, you do it. And you can do that for pretty much anything you want to do. And I mean, I grew up, my dad had a box of cassettes, and he always listened to motivational tapes. He always listens to how to make money with real estate. I mean, I grew up with my sister going to Zig Ziglar events in Toronto. I was even up on stage with Zig Ziglar when I was a young kid. So
wow.
I was definitely like put right in the entrepreneur, life is good kind of world. It's all what you think and what you believe, and just do what you love. One of the best books I read in college was Do What You Love and the Money Will Follow. Mm-hmm. And it makes me almost sound kind of preachy, but anyway, long story short is I do what I love. I wake up in the morning. Sometimes I wake up at 4 because I can't sleep. I'm too excited. Every day I wake up and I have different things to do. I'll be working on trading stuff. I'll be on a roll with something, or I'll be working on an invention in my shop, or, be looking for real estate. So it's just amazing when you have the proper mindset, and especially when you've got multiple passions, and all those passions also are opportunities to make money. It's nice because you're just kind of changing gears. There's always something to do in one of them, and you're never bored doing the same thing. And so yeah, cassettes, listening. I listen to a lot of positive videos on YouTube. Literally, I'll hop in my truck and I'll just go, Siri, play a motivational speech YouTube, and it will just pick a random one. And some of them are crazy weird, but I'll tell you, I'll be in the car for 8 or 10 minutes and I'll listen to it, and you feel like $1 million after. It's amazing how many different ways people can say the same thing. Success and motivation, it's all the same thing. It's just everybody says it and connects with a different type of person. It's really amazing. And if you surround yourself with that positive, it really makes you think and question, do I really want to do what I'm doing right now, or do I want to go do something that I'm passionate about? And I've got a friend who hates his job, lives in a spot he doesn't like. He's trying to get out of it. He wants to change his life and do something he loves. And so that's what he's trying to figure out right now, so that he wakes up in the morning energized and he loves what he does. And I think so many people hate going to their jobs. They wake up dreading it. And they can't wait for 5 o'clock or for Friday night. And it's a terrible way to live. I've hired help. Years and years ago, I hired an expert to help dive into my psyche and figure out, literally, I tell their team everything I wanted to know, everything I like, I don't like, how much I want to work, how much I want to make, what I am good at, what I'm not good at, what I'm good at, but I don't want to do. Literally, this team for like 2 months takes it. And then I flew down to Texas and I did this with their whole team. And they literally say, okay, well, these are the things. This is what you need to do. This is what you need to focus on if you want to live this life you're talking about. And then I've unfolded it and I've done that. And it's just amazing when you focus on doing highly leveraged activities, things that work, that make you a lot of money or save you a lot of time that you love doing. If you do those, just let other people do the rest of the stuff. And it really allows you to have that kind of freedom, like your podcast, a limitless lifestyle. And it's funny because I was talking to another group of people the other day, and I was telling them all the things I'm doing. I'm actually helping bring a movie. We're producing a movie later this year called The Goldilocks Mission. And it's in the climate space. It's bringing young entrepreneurs and innovators into the world, or into the spotlight from all around the world. And they're like, how do you have time for all this crazy stuff? I'm like, well, it's like, you just let people do the headache stuff and just focus on all the fun stuff that moves the dial. And it's easier said than done. I'm always working, but it doesn't feel like work, which is the nice part.
Wow. Well, I couldn't have, I have a huge smile on my face because it just surprised me this last bit, but it's so up my alley. I love this stuff. And I too had the old Tony Robbins cassette tapes that I used to listen to when I was walking or running. And I love everything you just said. And I think it's so important for people to hear. I don't even really want to try to summarize it because you said it so beautifully, but you got the help, you listened to the people you were learning, you were really looking into and analyzing what it is that you love. Because, I started Limit Free Life primarily as a career transition consulting company, and to help people figure this out. Because when you ask people especially people who are in dead end jobs or not even dead end, I was in a great job, but I still didn't love it. And that's why it really bothered me that it wasn't feeling like satisfying enough to me. And you ask people, what do you want? And that's a very hard question for people when they're mired in what they're doing and they can't see anymore what they want. So you have to go out there and go through a process of figuring that out. And it's really important.
It's a lot of people just see like a black hole. You're like, well, what are you happy doing? What do you want to do? I've got a few friends, they don't know. And I mean, literally, we've been working on it for years. My one friend, we're trying to figure out like, what is it you want to do? What makes you happy? He's like, I don't know. I'm like, oh man, no, how do you not know?
I know. And I mean, it just shows, in your face and with what you're saying, that when you do find it, I mean, work is never work anymore. It's, you have days that are more drudgery than others, of course, but work takes on a whole different perspective in your mind. And it feels, like you say, like you're looking forward to getting up in the morning and doing what you do. And there's nothing like that. That's completely invaluable. I mean, it's,
For sure.
So, well, thank you. Thank you for that. That was really a great piece, because I feel like I love kind of the intersection of the logic with, that was all pure emotion. So, it all goes together. And just because you're thinking about money or dealing with financial, aspects of your life, they're really not separate from the other things that you want. They're actually the means to the other things that you want.
They are. Yeah.
Okay. Well, this is great. I would love for you to come back when you're have your movie and then talk about that. That's a really cool project, and I love the fact that you're doing such a diverse array of things. And I so appreciate you sharing all your, well, not all of it, but some of your knowledge today with us here. And audience, I sure hope that you will go to thetechnicaltraders.com. Sign up for Chris's newsletter and, learn what you can learn from him. I think you will all be better off. So I'll be doing the same. And thank you again. I really appreciate you being here.
Thanks, Michelle. It was a pleasure.
Yeah, no, this was great. I loved your insights on things. So, all right. Well, an audience, thank you for being here. We love having you show up for the Money and You show. You can leave us a review or a comment on any of the podcast platforms, the Limit Free Life YouTube channel, Roku. We're sort of all over the place. And I would love that. It helps me to bring guests like Chris to the show each week. And thank you, ubngo.com, for broadcasting the show. We'll see you next week.